Good afternoon from California. I'm Ron Cohen. I'm a tax partner with Greenstein, Rogoff, Olsen and Company. And during the tax season, weekly, we're going to review some of the updates in the tax world. February 5th, 2011, the Senate passed by 81-17 a repudiation and repeal of the requirement to issue 1099 forms to every corporation that the taxpayer pays over $600. That provision was snuck into the Obama health care bill last year in the middle of the night when most senators and congressmen didn't read the bill. It was immediately repudiated both by Democrats and Republicans. It took quite a while to get the provision repealed while both parties fought over who would get credit for taking out a provision that neither party actually wanted in the first place. Nina Olsen, who's the taxpayer advocate from the Internal Revenue Service, put out a report saying that the 1099 requirement would create paperwork to go to the moon and back and would not create any more tax revenue to be collected by the IRS. So finally, it looks like that unnecessary provision is going to be repealed, and the only question is now why the 17 Democrats voted for keeping the bill there, where it basically, quote unquote, is tantamount to surveillance on taxpayers. February 2nd, the IRS issued Notice 2011-8. If you're a U.S. taxpayer living overseas, you qualify for an exclusion from some of your income and also a deduction or exclusion for your housing expenses. If you live in a very expensive town overseas, you get more than the standard $27,870 of exclusion for your housing deductions. In fact, if you live in Quebec, you get $28,200, and if you live in Tokyo, Japan, you get up to $118,500. So the new table was issued in Notice 2011-8. If you have clients that applies to, they might want to look at the new amounts. All right, in the case of David E. Watson, a CPA who had a tax firm organized as an S-Corp, he played the trick that many folks have tried in the past, where they pay themselves very little salary and then pay themselves a big dividend out of the S-Corp. The magic being that a dividend is not subject to Social Security or Medicare taxes where the salary is. Well, way back to the 1970s, the IRS was well aware of that loophole and made it so that if you earn income in an S-Corp and most of the income comes from your personal services, that your salary has to be reasonable so that you pay a reasonable amount of Social Security and Medicare. Mr. Watson failed to do so and now finds himself with a huge tax bill with penalties. Okay, on January 10th, 2011, the IRS issued Revenue Procedure 2011-14. I've been following this area for decades. This is for changes in accounting methods, which if you're a big company or even a small one with dealing with issues of accrual basis or cash basis accounting, certain transactions come up. In order to change your method of accounting, you have to go through a formal procedure and ask the Internal Revenue Commissioner to approve it. This document is 325 pages. There's a whole world of experts, a number of people who spend their career on accounting methods, and in this case, if you're considering doing one of those filings, you definitely need to look at that new procedure. On December 28th, the Internal Revenue Service issued Revenue Procedure 2011-13. Just to say that that is a procedure that has us very concerned in that it requires taxpayers and their tax preparers to provide endless documentation of uncertain tax positions. There's a new schedule UTP that goes with the Form 1120 for corporations, but there's been for years Form 8275 and 8275R, which talks about where if you think you're going against a regulation of the IRS, that you have to disclose a good deal of information. The point with all these things is, yes, they alleviate potential penalties if the IRS ultimately disagrees. On the other hand, they make your tax return a target because just the presence of Form 8275 or 8275R is an audit trigger. The UTP, you can read about that. There's a long checkered history of that, and that the corporate community has been objecting to the fact that now items that are in their FIN 48 tax provision under old FASB 109 have to be laid out on a Schedule UTP. Okay, so then on January 21st, it turns out that many taxpayers who claim the credit for plug-in electric vehicles and alternative used fuel vehicles, the Treasury Inspector General has identified that those folks are cheating and claiming credits they don't deserve. So you want to make sure your clients are doing those correctly, excuse me. And on February 2nd, 2011, the Tax Inspector General mentioned that while all tax preparers now have to sign up with a taxpayer identification number, PTIN, the Treasury Inspector General said it will take the IRS at least 4 years before they're actually going to be able to do the background checks on preparers to make sure they're qualified to be a preparer. One last thing, I want to point out that on December 7th, 2010, the IRS changed the interest rate that's due on underpayments of tax. This is underpayment during the tax year is now down to 3%. It was 4%. If you're unpaid with your tax as of April 15th, the final filing date, then those penalties jump up to approximately 4.5% per month instead of the underpayment penalty during the year, which is 3% now per year. Well, thanks very much. We'll see you next week. I appreciate you watching. Again, I'm Ron Cohen with Greenstein, Rogoff, Olsen & Company. You can see our website at www.growco.com, and please call or write if you have any questions. Thank you.